Do you know that 90% of individual investors actually lose money in the stock market? And often the problem is not with buying the wrong stock. Instead, their biggest mistake is selling at the wrong time for the wrong reason. And that's what we're going to talk about in this video. There are many content online about investing that revolve around good buying strategy, but that's actually just half of the formula to make money in the stock market. Now, the second half of this formula that many people don't talk about is a proper selling strategy. In fact, I would argue that this is the most important investment skill that separates the 10% who consistently make money and the 90% who don't. Stay till the end because I'm going to show you how to do this step by step in this video. Step 1. We are talking about a 3-account strategy foundation. It's a simple strategy used by many seasoned investors that can change your investing game drastically. You see, for most beginner investors, they only have one brokerage account. This means they mix everything together, whether it's for short-term trading or for long-term holding, all in one account. But the issue is, this tends to lead to emotional, impulsive decision when the market gets volatile, because as the market moves, you are looking at both your long-term holding stock and short-term holding. And it can really confuse us sometimes. That's why I advocate for having at least 3 distinctive investment accounts, each with their own dedicated strategy. This helps you compartmentalize your goal and stick to your plan, especially when it comes to selling. The first account we want to talk about is for long-term growth. This is your foundational growth investment. You will probably be applying strategies like DCA for this account. Think of companies that you believe in that will grow in the next 5, 10 or 20 years. You're going to hold it over long term. The second account we are talking about, the dividend income account. This account is purely for generating consistent income stream, typically by investing in high dividend stocks or REITs. Account 3, we'll call it the short-term tactical account. This is where you execute your short-term strategies, capitalize on market swing, or even occasionally trade positions over days or months. Now, each of these accounts should have their own completely different selling rule, and that's what makes this strategy so powerful. Alright, let's start with the long-term growth account. Now, the selling strategy here is far down the road, and it's usually for major life goals like retirement or maybe children education. Fundamentals of the company drastically change. Let me give you a real-life example. You see, I had Nvidia in my long-term account, and I bought that in 2019. My target was that it will grow about 200% over the next 4 years. But when AI exploded in 2024, my target was hit. In fact, it overshot and I hit 300%. My strategy is always, if I hit that number, I'm going to sell about 50% to take profit. So that's what I did. Although today, the remaining shares I have, they have reached 500% return, and some people tell me I shouldn't have sold, I should have just kept it, but it's okay, because the point that I want to make here is this: the strategy was set before the market got crazy, not during. Now, I had a plan and I stuck to it. That's the point. So here are some selling triggers you can use for your long-term growth account. Number 1, a fundamental thesis change. This is the reason they bought the stock. It no longer applies because maybe fundamental market quality change or the company changed. Like, for example, they had certain tech that they were using, but they decided to stop producing those tech. That could be a reason to trigger a sell. The second trigger should be when your target price is reached. Now, when you hit your predetermined profit target, you should execute your plan. Sell it. Yes, you may get greedy and think to yourself, well, if I don't sell, maybe the stock will go higher. Now, that may not be a very wise choice, because it is better to sell and then after that reevaluate again if you want to enter the market later. The third trigger should be life goal funding. Let's say you have decided that this investment account is for your retirement goal and you have a certain amount that you need to take out during retirement. When that time comes, you sell, especially if it is performing well. The fourth trigger here will be portfolio rebalancing. When the position of the stock has grown too large relative to your portfolio, that's when you will think about selling those stocks as well to rebalance. In fact, that was also one of the reasons that I decided to sell my Nvidia stock at the point. And I also saw other opportunities that I believe could be better than Nvidia at the point. So I decided to sell it and reinvest it into other assets. Anyway, the beautiful thing about this account is that you are thinking in years, not months or days. So this really removes so much more emotional stress from investing. You get to take your time to make those decisions. Now, let's talk about account 2, the dividend income account. The purpose of this account is purely for generating a consistent passive income stream, typically through investing in high dividend stocks or REITs. So the selling strategy here is generally you won't sell unless there's a significant fundamental deterioration in the company's ability to pay their dividend or some sort of major market shift because the goal is to generate income stream. So you don't sell it, right? Anyway, here are some selling triggers that you can use for your dividend income account. Number 1, dividend cuts or suspension. Basically, the whole idea here is that the company can no longer maintain the payment. So since the goal of this account is to generate passive income stream, when it stops generating passive income stream for you, well, that's the time to sell. The second trigger is for better opportunity. For example, if you find another asset that can give you significantly higher yield, well, you basically swap those assets, you sell this and buy the other one. The third trigger is sector rotation. Generally, the idea here is this. There are certain major shifts that make the entire sector unattractive. For example, if you believe the thesis that retail may be facing significant headwind and it will not be able to give you the kind of income, that's when it may trigger you to think about selling. But let's not forget, investment requires patience and you're not trying to time the market. Now let's move on to account 3. This is a tricky one because we are talking about short-term tactical account, right? This is where you execute those short-term strategies. Capitalizing on market swing or even occasionally trade your position over days or months. Now, short-term trading is all about precision and timing. What you're looking for is a specific opportunity. Maybe a stock that's oversold, a sector rotation, or short-term catalyst like, say, Trump or something like that. So knowing when to sell gets very critical here, and disciplined decision-making becomes an absolute essential. You need clear entry and exit rule before you even buy. So here are some of the selling triggers that you need for a short-term account. First, profit target hit. When you go for short-term trading, you need to already have your predetermined target price. It is even more critical compared to long-term account. Long-term account, you can still say wait and see. This one, really you can't. Number 2, you need to have a clear stop loss trigger. When you hit your maximum acceptable loss, you just have to move on. You cannot say, maybe I can wait a little bit more. Just move on. That's the rule of short-term trading. Number 3, time-based exit. When you hold it already for a specific period of time, regardless of performance, you have to follow the plan and exit. Number 4, technical breakdown. When you already have certain key support level or certain thesis in terms of the technical chart, when those things are broken, well, that's the time to exit. The next is catalyst play out. So, imagine for a particular stock, the reason you bought in is because of election. When election has happened, that is the time to sell. But let me be very clear about this. This account requires the most discipline and the most knowledge and the right tools. So to execute these strategies effectively, especially in such a short time, you need to use the right kind of account with the right tool. And this is where, for this particular account, you better use a platform that is more advanced. For example, like Webull, the partner of today's video. So why do you need such an advanced platform like Webull for your third account? Well, the first thing is this. you need to have an advanced charting and news integration system. Advanced platforms like Webull today offer quite a good charting tool within the app itself. It allows you to apply various indicators, analyze the price action, and even draw the chart within the app itself. Plus, at the same time, under one platform, it also feeds you with the latest news. Unlike last time, in order to trade, you're probably going to open a couple of different tabs, looking at different things all over, using different tools for different things. Today, with one advanced platform like Webull, you can see everything. So everything, you get it at speed. And speed is essential. Another reason why you need this advanced tool is this. Remember earlier we talked about stop loss, target price, and all this? Instead of you doing all the manual calculation, today under the Webull platform, you can use this thing called a position sizing calculator. And this is really critical because it helps you to visualize your position size and your risk exposure, and you can see exactly what percentage of your portfolio are you risking before even placing the trade. I would say that this is one of the most important tools here because this is the part that separates professional from beginner traders. Knowing exactly what kind of risk exposure are you taking and sticking to it. Now, in the past, you gotta calculate it yourself and sometimes you may make the mistake. But with this convenient tool here, it makes it really easy. Imagine the stress of deciding whether to sell or not. That's already quite a lot. Then you need to do the stress of calculating some more. That's worse, right? And that's what I like about this tool here. Now, the next thing is this cost efficiency. Now, if you're going to be doing short-term trade, it means that you're going to have multiple transactions. You want to make sure that the fees are really, really low. That way, you can maximize your profit when you trade. So right now, Webull is actually charging a 0% commission on Malaysian stocks until the 31st of December 2025, making it an incredibly cost-effective for any form of active trading strategies. So if you're interested to check out Webull, click the link in the description and use our code to download the Webull app and start maximizing your investment potential today. Sign up and you'll get 50 ringgit in trading vouchers, top up 500 and you'll receive 100 ringgit worth of Nvidia shares. Deposit with 5,000 and maintain for 30 days without withdrawal, and you get to unlock up to 400 ringgit in Nvidia shares. So don't forget to use our code when you sign up. Alright, so how do you actually implement this 3-account strategy? Now, let me give you a step-by-step action plan. Step number 1, start with account 1, which is the long-term growth account. Select 3 to 5 companies that you believe can grow for the next 5 to 10 years. Then you set up a dollar cost averaging plan. Maybe a 500 ringgit monthly split between these companies or 1,000 ringgit, depending on what's your affordability. Anyway, do write down your criteria before you buy. And not to forget, list down your selling triggers as well. Remember all the selling triggers? If not, go back and watch it. Step 2, build your account 2. Now, research for some high dividend stocks and some Malaysian REIT. Now, you can probably target about 4 to 6% dividend yield and reinvest those dividends for compounding growth. Step number 3, learn how to trade before actually using your account 3. You can always start with paper trading first, practicing without real money. And if you want to learn more about technical analysis and trading, do check out our sister channel, FAQ Show. Also, not to forget, when you are ready to begin trading, start with a maximum of 10% of your investment portfolio. Only trade what you can afford to lose because this is much more high risk. And don't forget to be disciplined and set strict stop losses and take profit when you hit your target. Step number 4, choose your platform for each of these accounts. Now, for Malaysian investor, I would suggest you to use Webull for your 3rd account because it has a lot of advanced tools and 0% commission as well. So set up a separate watch list for each of these strategies as well and practice using position sizing calculator. Now, step number 5, track and review. Review each account monthly. What you can do is also keep a trading journal for your short-term account. That way you can learn from your experience every time. Adjust your allocation as you gain experience. You see, the difference between the 10% who consistently make money from the stock market and the 90% who lose usually is not about how intelligent are they or how lucky are they. It is all about having a clear strategy and the discipline to stick to that strategy. So this 3-account strategy gives you that framework. It removes emotion from your decision and it gives you clear rules for different set of stocks when to sell. And it allows you to pursue different goals without being confused. So remember this, a long-term account, buy and hold quality company, dividend, focus on income generation. Short-term, you want to focus on precision and discipline with clear exit rules. And if you want to use the tools that I mentioned, check out Webull using the link in the description. Remember, they're offering 0% commission on Malaysian stock until the end of 2025. So what's your biggest challenge with knowing when to sell? Tell me in the comments below, and if this strategy helped clarify things for you, share it with someone who needs to see it.